In this video, I'm going to be covering the trading strategy slash concept that I have personally been utilizing for the past 3 years and has also been making me hundreds to thousands of dollars every single day. My name is Tukhi and I have been trading options for a little over 4 years as of now. Like I mentioned, I have been trading with this strategy for 3 years, so I have had plenty of time to be able to test, refine, and really build this strategy to make it as best as possible and as fit to me as a trader. So in this video, I'm going to be covering exactly what that strategy slash concept is, explaining it to you guys, and also showing it to you guys on the charts so you can then apply it to your own trading and possibly do the exact same. So let's go ahead and get started. So the trading strategy slash concept that I use slash utilize is going to be supply and demand. Now, there are many different trading strategies, many different ways you can trade the markets, but supply and demand is realistically one of the main ways, one of the main drives of why price actually moves within the market. Keep in mind, market moves based off of buyers and based off of sellers, right? So let's go ahead and get on into it. So what exactly is supply and demand? What are supply and demand zones? So supply and demand zones are general areas on the charts where price has reversed previously due to a high amount of demand or a high amount of supply within a specific asset. So supply and demand, you can also think of it as simply just buyers and sellers, demand being the buyers and supply being the sellers. I'm sure you guys have heard of the term supply and demand, basic economics, but like I mentioned, this is how the world works too, pretty much, but also this is how the market moves based off of supply and demand. And you can use supply and demand to trade within the markets and see things that other traders probably don't see, right? So as I mentioned, supply and demand, simply just aggressive buyers and aggressive sellers, right? When there is high demand for something, typically a lot of people are going to be interested in it, looking at it, slash buying it, right? Vice versa for supply. If there is high supply for something, it's simply just too expensive, or there are a lot of people selling, right? So like I mentioned earlier, market moves off of buying and selling. So supply and demand is simply just areas of strong buying and areas of strong selling. Moving on. Now, let's go ahead and let's start with our demand zones. So demand zones are areas where our large institutions slash banks spot an asset as a valuable buy or a cheap price entry. These buyers will add to their assets in these certain demand zones due to price simply being at a value, right? Since there is high demand, it's a valuable buy slash discounted buy for these banks slash institutions. And if you're probably confused, why am I mentioning the banks and stuff like that? Banks, institutions, stuff like that, those are those are the market movers, right? Those are the people who are trading with millions, hundreds of millions of dollars in positions. So obviously all of that money, all of that trading activity that they are presenting is what is realistically going to be moving the market. As I mentioned earlier, market simply moves based off of buyers and based off of sellers. Buyers and sellers are simply just money, right? Money going in and out of the market. So if there is a lot of money going in and out of the markets, that's simply going to cause the markets to move more because there is more money being put in, right? So just a quick recap, demand zones are simply just areas on the charts where we see institutions, banks loading up their buy positions or simply just getting into large buy positions. And typically what that means on the charts is when we see strong moves to the upside, when we see powerful moves to the upside, that means that there are strong buyers. There is strong buying activity. That also means that there is strong demand, right? I'll show you guys on the charts shortly some examples to make it more fluent to you guys to actually understand. But Stay tuned. So moving on to the next slide. Now this is going to be supply zones. So supply zones are simply areas where the large institutions see a specific asset as too expensive or simply reaching its price premium. Like I mentioned earlier, that's exactly what it is. Supply is just areas on the charts where price is at the highest point possible. And if it's at the highest point possible, what do you think is going to happen? Right? There's going to be lots of selling. If something is at the most expensive point, the highest points, traders are going to want to be selling at the highest point to get the most profits possible. And if there is lots of selling, meaning lots of money going in and out of the markets in one area, obviously that area happens to be our supply zone. That area is also a confirmation for us to look out for to expect a price reversal, right? And we can obviously utilize that reversal for our entry, our exit, take profit, whatever the case may be. Moving on, market movers start to take profits / offload their assets at the price premium / supply zone. So just how I mentioned, the market movers, banks and institutions, they're taking profits, they're selling at the supply zone. So if there's lots of selling going on in one area, that is going to cause price to move down, right? Just like demand. If there's lots of buying in one area, and that buying in one area happens to be our demand area, we're going to see a strong move to the upside. Obviously, vice versa for supply. Now, let's go ahead and move on to the charts so I can visually show you guys what supply and demand actually looks like on the charts and how you can use it. Now, this is the trade that I actually took today. Went well over 150%. And keep in mind, you guys, this strategy, this concept, this way of trading I have been using for 3 years now. This isn't something that I just picked up yesterday and have been testing, right? This is also one of the most known / effective concepts that you can trade with in the markets. This concept has been around forever, right? Literally forever. So this isn't like it's some type of, dumb bot or anything like that. This is a real life concept in and outside of the markets. So here you can see that I have my supply zones. So our zones are just simply areas of where there is strong buying and strong selling. So as we went over on the slide, we saw that areas of supply are going to be areas on the charts where there is going to be strong / excessive selling. Now you can see here, once price hit our supply, what do we see? We see a strong push to the downside, very strong push, right? Meaning that those sellers utilize this supply area, and this is indeed where those market makers sold sold pretty much all of their positions. And if there is excessive selling in one area, obviously that gives us the confirmation or idea as traders that price is likely to reverse within that area. So you can obviously see here that that's our supply. Now moving on to a demand that I can show you guys. So let's go ahead and move on to a larger time frame just to make it easier to look at. Now we have our demand zone. So this is going to be obviously our demand, aka the area of buying interest, the area where buyers are looking to take advantage of most to get into their full positions. Now we can obviously see here is our demand, which I have labeled out. Keep in mind, I am labeling and sending out my supply and demand zones every single day in the Discord, also doing pre-market reviews every single morning, sharing my game plan / thoughts on the trading day. So if you guys aren't in the Discord, make sure to click that link in the description to join the winning team. But other than that, we obviously see our demand. Now, here we can see multiple moves off of this demand, but initially we see that, this demand could be created right here. So obviously, like I mentioned earlier, demand zones are created when we see strong buying being presented within the market. We can see a strong move to the upside, strong push to the upside. What does that indicate? Strong buying, right? So we would want to mark out that area that presented that strong buying and then use that as our zone. So let me just do a quick example and draw a zone live with you guys. Now I have plenty of videos covering how to actually draw these supply and demand zones, but I want to make sure I actually cover everything in this video, or at least as much as I can. So obviously we're on the charts here. We're on the higher time frame. Typically when I'm drawing my supply and demand zones, I'm either drawing them out on the 30-minute time frame, 5-minute time frame, or 1-minute time frame, okay? So here, obviously, we see a strong push to the upside, like I mentioned earlier. Now, what I want to do is I want to mark out that candle previous to the strong move up, right? So pretty much the candle that started the move, which is going to be this black candle. Now, what I'm going to do is I can mark out the whole candle, but instead I want to make sure that my zone isn't as wide, because realistically the wider our zone is, the more we are risking on that trade. And I'll kind of explain to you guys what I mean by that. So what I'm going to do is I'm only going to mark out the wick of the candle, right? We're going to mark out the wick and then we're going to extend this out. So now that we have this extended out, boom, perfect. We can see, let me just do that one more time. Okay, so we get our box out, draw out the wick, only the bottom wick only, and then obviously just extend this zone out. Boom, 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 boom. Now you can see our zone was created right here, and we got a retracement into this zone. Then once we got a move into this zone, look what happens, right? A powerful move, very strong move. Obviously, due to the fact that we previously had strong buying here, or we previously had a strong area of buying interest here, so we marked that area out, expecting price to do something similar when it reached that area again. And that's exactly what it did. Retraced to that area, respected and rejected this demand zone very well, and started to show excessive, very strong buying, right? Obviously, we get this strong move to the upside. And same thing again here. You can see tap into our zone and boom, get a move to the upside. And then obviously it continues up higher. So that would just be a quick example of how you can actually draw those zones out. And then same thing, for supply zones, it just be vice versa. Instead of looking for a strong push to the upside, we want to see a strong move to the downside, right? And keep in mind, we want to look for a strong move, a strong push to the up or to the downside. Don't just be marking out some type of bullshit move. You want to look for a strong push. The stronger the push, the stronger the indication of the excessive buyers slash sellers actually being presented within that area. What do we see here? Very strong push to the downside. Let's mark out that candle that started this move, okay? Let's mark out the candle that started the move. So it's going to be this blue candle here. Boom, boom. We're going to mark out the top wick rather than the bottom wick because this is a supply zone. Then we extend that baby out, right? We extend it out. Now that we have our zones drawn out on the higher time frame, we want to switch to the lower time frame because the lower time frame is where we're going to be like making our entries and making our decisions realistically. So then this is the exact supply zone that we just drew out. And then you can see price hit our supply zone and our stop loss. This is what I always do. This is why I also love supply and demand, because your stop loss can realistically only be in one spot. And that spot is either a break above supply or a break below demand. Because when price does break above that zone, it shows that that zone is not a valid area. So since it's not a valid area, it's not something we want to look at or look to trade anymore, right? We only want to look to trade valid areas, which in this case scenario, this area was extremely beautiful and extremely valid. you can see that I had taken my entry all the way up here. Stop loss was a close above the supply, so I was risking very little, right? Stop loss was, our risk was beautiful. And then you can obviously see here were my main targets, this low right here, as well as the daily low, which was right here. Those were both of my main targets, and you can see how well this trade worked out. And, you know, both of my targets got beautifully smashed through, even continuing lower, right? Even continuing lower, and even obviously showing that we got very strong selling pressure from this supply area. Now, one of the biggest things that I tell a lot of the traders or just people within the community is that one of the biggest ways to understand whether a supply or demand zone is actually valid is by reading and understanding price action inside that supply or demand zone. Keep in mind, candles are pretty much telling us a story. So it is our job as traders to understand what the candles are doing slash how they are looking inside of our supply and demand zones, right? For example, if price goes into our demand zone, we want to start to see the candles to start to look bullish, to start to show buying pressure, right? Because obviously if we're trading off demand, we want to look for a move to the upside. So if we're looking for a move to the upside, we would want to look for bullish price action, vice versa for supply. That's one of the biggest things. Another big key thing is by using slash trading with order flow with supply and demand. That's also like one of the biggest game changers and biggest confirmations that you can use. You don't need it, but it is a confirmation that can help you out a lot if you are having trouble. Now, like I also mentioned earlier, I have so many different videos on how you can trade supply and demand. Look at it, but I want to make sure I can at least cover the main things in this video. So that's going to be that. Obviously, went over an example of how we draw out our supply zone, how we draw out our demand zone, and then obviously taking our entries inside of supply and inside of demand. And also the cool thing too, like I did mention to you guys, is when you're trading supply and demand, your stop loss is realistically or can realistically only be in one place. And that's either a break above the supply or a break below the demand. Because obviously, like I said, if it gets invalidated, that means that that zone is not a valid area anymore. I've probably said supply and demand like 1 million times in this video, but you know, it is what it is. Now, moving on. So what I do want to show you guys as well is here in the Discord, I'm Pacific time, so you guys can, market opens at 6:30 a.m. for me, right? Because like I mentioned, I'm Pacific time, so each and every single morning, I am alerting my pre-markets analysis. I'm doing it live in the call, and I'm also sending it out in the channels to the people that probably aren't able to make the calls. But here you can see at 6:19 a.m., I sent out my Tesla analysis. Now I sent out all of my zones, right, that I was looking to utilize, right, if we were to get a retracement. Now these zones are simply just areas on the charts that have presented price with A, either a strong amount of supply, or B, either a strong amount of demand. Right? That's why I am drawing out these zones. I'm not just drawing out random ass boxes on the charts. Now, for example, you see here's my Tesla chart, which obviously was today at 6:19 a.m., 10 minutes before market open. You can see I alerted this 182.55 supply area going to Tesla. This is on Tesla too. Going into Tesla, you can see 182.55 supply. That was the highest point in which price reached before we absolutely dumped to the downside. This was also the same exact zone that I took the trade off of, resulting in over 150% on the option contracts. So supply and demand, very, very possible. And obviously you can see it results in very beautiful trades if traded slash drawn correctly. That's one of the biggest things. So that's going to be that. I'm going to wrap up the video here. I hope you guys were able to learn something new or apply something from this video onto your trading. If you guys are not in Tukhi trading, go ahead and click that link in the description to get access to live trading with me, pre-market analysis each and every single morning at 6 a.m. where I share my game plan, analysis, zones for the day, and much, much more. Other than that, family, if you guys have any questions or whatever the case may be, leave a comment down below, and I'll see you guys in the next video. Much love.